Hello everybody, welcome back to another valuation investing video, and today in this video I'm going to be going over Adobe stock, in which I think Adobe stock could be a very undervalued play right now if you truly believe that this company can excel in the future and not deteriorate because of AI. And with that being said, why I think this is potentially a decent time to buy, taking a look at the stock down 34%, the sentiment around Adobe stock is very low because of the future of AI potentially taking over the business and competition in this industry. So this could be a decent time to buy this company. Right now its valuation's at about $150 billion. So if you wanted to buy this company, that's how much this company is worth as of today. And as we can see here, it's right near its 52-week low. So this company is trading very low, near a 52-week low. So it's at a pretty good price if you believe in this company. And taking a look at what Adobe does, most of you probably do know what Adobe does, is they make their money through primarily the sale of software subscriptions and licensing. Its main revenue streams are divided into three segments: digital media, digital experience, and publishing. So this company is basically a subscription-based company. They mainly offer software for people to use. And taking a look at the products that this company has, obviously you've probably heard of almost every single one that they have. They have Photoshop, they have Premiere Pro, Lightroom. They have so many of these products. They have literally Experience Cloud, Creative Cloud. They have Adobe Online, Adobe Acrobat. They have all these apps that you can purchase and have a subscription for. And that's another reason why I really like Adobe stock. Taking a look here, 94% of its revenue comes from subscription. So this is recurring revenue over time. As long as the subscribers don't decrease, then this company is going to continue to increase that revenue over time. And why I really like Adobe right now, even though the sentiment is very bad. Normally in the stock market, if you can find a company where the sentiment is much more exaggerated than what it is right in the future, if it's more exaggerated than what you think it could be and what it actually turns out to be, it's a very good time to buy a company. And with that being said, take a look at the positive factors I think for Adobe could potentially be AI. Even though people say AI could potentially hurt this company very bad, I think AI could actually improve this company if they can stay on top of investing into their AI infrastructure. As we can see here, Adobe has made a major strategic move by integrating generative AI into core products, which is a powerful positive factor for the company's future. Its AI model, Adobe Firefly, is trained on a licensed data set. So this company is implementing AI right now, and if they can continue to outpace other competition and continue to outpace AI, this company could really outperform the market if they continue on the pace they're going and not deteriorate over time. Also, their AI strategy also extends beyond creative tools. The company is leveraging AI in its digital experience segment using tools like Acrobat AI Assistant and Gen Studio. So this company, although people are saying AI will hurt this company in the future, they're actually implementing it into their business. Although right now AI isn't really looking like a very good revenue or net income segment, they're not making a lot of money off of it and it's not really monetized. They still have to do this in the future for them to stay relevant, I believe. And if they continue to do that, I think this company will definitely stay relevant in the future. And another positive factor here is their dominant market position and subscription model. They have all these apps such as Photoshop, Illustrator, and Premiere Pro, which are industry standards for competitors, and it's a high barrier for entry for other companies to potentially hurt this company. And the company's successful shift to a subscription-based model has created a predictable and stable source of recurring revenue, which is a major strength. Like I said, a company that has a subscription-based model is very easy to predict in the future, a lot easier than a cyclical type company, and that's why Adobe is going to be a little bit easier to predict the fair value price. Also, it has helped boost their subscribers to 33 million paid subscribers and is continuing to grow at a very good pace. So this company still continues to have a good retention rate and it's justifying its premium pricing. So that's another thing people say about Adobe, is that they have such high prices for their products, but people still continue to buy it because it's the best in class. If you have a really expensive thing but it's really good and it's worth it, people are still going to buy it. But with that being said, here are some negative factors about Adobe going forward. even though AI was a positive factor, it also is a negative factor because of growing AI competitors and also concerns about Adobe's AI strategy going forward. Although they have invested very heavily into its AI like Firefly, some investors have concerns about the company's ability to effectively monetize these tools. Like I said, it hasn't really been monetized very well so far, but as long as it continues to stay with Adobe and they continue to improve it in the future, which will potentially allow people to stay, I think this looks still pretty good for Adobe. Also, the pricing power of this company could be a negative factor because it is very expensive and there are more affordable AI tools coming out. This could affect Adobe in the future, but I don't think that's necessarily a huge problem because they have such good products that people are willing to pay for Adobe. Unless technology really starts to improve in the future where AI completely takes over Adobe, even though I don't think that's going to happen because I think people want to control and use Photoshop, and I don't think Premiere Pro is going to go anywhere. If anything, the only thing might is Photoshop, but I still don't see it going anywhere because while AI can potentially do those type of things, people still want to use it themselves and get exactly what they want. They don't want someone else or something else like AI to do it for them and potentially not get the right result. Also, the slowing growth and weak outlook from Adobe has people concerned and weakening the sentiment around this company because of disappointing guidance, where the company has issued growth projections that have been lower than what analysts and investors were expecting. Also, slowing revenue growth, it's starting to slow down a little bit, but it's not slowing by a huge margin. And then also there's some macroeconomic factors, which I'm not too worried about that because every company is probably going to have macroeconomic factors at some point in time. As long as they can continue to do what they're doing right now, I think they're fine on that aspect. But obviously the biggest problem is AI and competition with this company. But if you truly believe it's overblown and over exaggerated, with this price today, I think it's a decent buy. Taking a look at the revenue of Adobe, we can see increasing every single quarter over time. Analysts still expect an increase this quarter, although it's not a huge increase. It's still expected to increase this quarter at a decent rate. So the revenue looks pretty good for this company, which is the total sales of Adobe. Now taking a look at the earnings per share of Adobe, we can see once again increasing basically every single quarter at a pretty good rate. So the growth and financial health of this company looks pretty good in this aspect, although it's probably expected that this company is going to slightly grow less in the future. I still think this looks pretty good. And taking a look at their guidance that they had from their last quarter, obviously last quarter they said they had an 11% year-over-year increase in their revenue, where they reached a record revenue of $5.87 billion. So the company continues to reach record revenues. Also, their earnings per share reflected a 13% increase from the previous year. So this looks very good for Adobe. But taking a look at their guidance, we can see the company actually raised its full year revenue target to 23.5 to 23.6 billion, with expectations for digital media segment revenue between 17.45 and 17.5 billion, and their digital experience segment revenue of 5.8 to 5.9 billion. So they actually did increase their full year guidance, their revenue target. That's just their revenue they increased. So this looks good for this company. But with their next earnings, we'll get a bigger picture of what they think for the full year. But with that last quarter, it looks pretty good. Now, taking a look at my 7-step stock analysis, these are the 7 key metrics that I like to look at for a company to look at the basically broader view of their financial health. So as we can see here, first, PE ratio of 22. If you don't know what a PE ratio is, it's the price divided by the earnings per share. So this is how much you're actually paying for $1 of earnings per share if you bought this stock today. So you're paying $22 for $1 of earnings per share over the past year. That's the trailing PE ratio. Now for the forward PE ratio, this is the same thing as the PE ratio, but this is the earnings per share that is expected by analysts for the next year. So we want this to be less than the trailing PE ratio, which it is, and it's actually very low compared to the PE ratio, meaning analysts actually expect this company to still grow at a pretty decent rate in the future. So they expect the earnings per share to increase over time, and if you bought this today, you'd be paying $15 for $1 of earnings per share in the next year. So this is a very low valuation for Adobe, especially compared to what they have been in the past, and also compared to the stock market trading at about a 25 to 30 PE ratio. This looks like a pretty low valuation for Adobe, but it does make sense because of the uncertainty of the future of Adobe. Now taking a look at the growth rates of Adobe, both the revenue and earnings per share growing at 14%. So this company is continuing to grow at double-digit rates. So this looks very good for Adobe. And people say this company is dying. So far they're not, but we can't necessarily look in the past for Adobe. In the future, I still expect them to grow, but I think this is definitely going to decline over time. Especially last quarter, they only grew about 11% year over year. So I'm going to probably guess this is high single digits for the next coming years. Also, another good thing is the shares outstanding for Adobe. I really like this, decreasing by 3% each year. If the shares outstanding decrease over time, you're actually getting more ownership in the company, because say you own 10 shares of a company, and just say for example there's 100 shares outstanding. If they say bought back 10 shares, you'd own 10 out of 90 shares instead of 10 out of 100. So you're actually going to have a greater ownership in a company, and it's going to increase your percentage ownership. That's why the earnings per share goes up when they buy back shares. The only X I have here is the debt to equity ratio, in which it's 57%. Which actually is almost in line with what I want at 50%. So this looks still pretty good, which means they have about half the amount of equity is debt. Not half the amount of equity is debt, but half the total amount of equity in dollars, they have that in debt. So it's actually not too bad for the balance sheet. And also, analysts expect this company to continue to grow at 12% for the next 5 years each year. So analysts still see this company growing at a pretty decent rate for the next 5 years. So now taking a look at my intrinsic value calculator, in order to get a fair value price for Adobe, I have to use assumptions of the future. The first assumption I have to do is for the annual revenue growth rate, in which I'm going to do the bear, base, and bull case for Adobe stock. So going back to this, I'm going to go over to this slide, and as we can see, the revenue for Adobe has been increasing every single year. Right here, every single year this has been increasing over time. We can see on average it's growing at about 10 to 12% for the past 4 years. So it is starting to slow down a little bit. So with that in mind, going back to my intrinsic value calculator, for the bear case, analysts expect this company to grow at about 12% with their earnings per share. For the bear case, let's say they grow at 6% each year. For the base case, I'm actually going to say let's go 9%. For the bullish case, I'm going to go 12%, in which they've been growing at about 11% each year. And I think for over the past 3 or so years, I think 9% is a fair base case, because I do expect deceleration in the growth rate, but I still am a little bit more bullish than what I think some analysts might be on this company. Now going forward to the future profit margin, we can see I have to use assumptions for the future profit margin. But going over to the profit margin here, we can see right now the profit margin is just over 30% right now. We can see the profit margin has actually been kind of decreasing over time a little bit. On average, it's at about 30%. So with that being said, going over to the intrinsic value calculator, say competition does get a little bit worse with Adobe and starts to eat at that profit margin a little bit. With the bear case, I'm going to do a 25% profit margin. Base case, let's do 28%. In bullish case, let's do a 31% profit margin. I do see in the future that the profit margin might decrease by a little bit just because of increased competition. Now for the future PE ratio. Taking a look at the past PE ratio of Adobe, we can see it has been decreasing basically every single year. Right now, as we saw, it was trading at about a 22 PE ratio. On average, this company trades at nearly 40. Do I think they deserve a 40 PE ratio? Probably not. But going over to the bearish case, if a company is going to be growing at about 6% each year, I think Adobe has a decent moat. I don't think it's a huge moat, but I think they have a good competitive advantage, and I think they have good staying power where I don't think people are going to want to leave Adobe, and it's pretty hard to leave Adobe because they're so integrated. So going to the future PE ratio, if you're going to grow at 6% each year, I think a fair P ratio would be 18. Now for a 9%, I think 22 P ratio, which is what it's at right now. And say they grow at 12% each year, I think a fair P ratio could be 26. Now going to the shares outstanding. Looking over at the shares outstanding in the past right here, we can see they really started to buy back shares at a fast rate. This company has very good confidence in their buybacks because of the stock price decline. I'm glad they're buying back stock. This shows confidence that they have confidence in the company going forward, and they're buying back at almost 5% just last quarter. So they're buying back insanely fast. On average, it's at about -3%. So they're buying back at 3%. Going over to this value calculator, let's say on the bearish case they buy back at 2%, bear case 3%, and then bullish case say they buy back at a whopping 4%. With that being said, I get a total annualized returns for the bearish case of basically nothing. I think it would be flat. For the base case, almost 11%. For the bullish case, 21%. So right now, I think Adobe is at a pretty good spot as long as you believe that this company will continue to grow and that AI won't completely destroy this company. And say the profit margin stays at what it is today, I think you can make 12% if they grow at 9% revenue growth. And say they just grow at 10%, which could definitely happen. This is what I think. You could make 13+% on this company. So me personally, I don't think I'm going to buy today. But like I said in my last video on Adobe, if it got to say 300, I would probably look into buying this company if it got around 300. So thank you guys for watching this video on Adobe. Comment down below some feedback on this video. Please subscribe, hit the like button, and thank you guys for watching.